Okay, let's look at results for round two. We see that in round two, or what they call Y2, which I guess is year two, we can see that the highest profit margin, net profit margin per team was 55 million. This round, that same team hit over 70 million, $72 million in net profits. And we had another team here over 70 million in net profits. We see that most teams moved up from last round to this round. We did have one team here who made from 22 million to 63 million. So they did very well. Must have watched my videos, read the student user guide, played a few practice rounds. We had one team here, Super Autos, go from 45 to 31 million. So a rare reversal in profits. Moving forward to points per team, we see that if we look at AdMech, they since their profits went up, their points skyrocketed. So they were able to year over year develop a tremendous amount of points. Only one team lost points from 800 points the first round, which is outstanding, to a negative 45 points the second round. This team here also went up from 300 to 800 points, while best one was worst one in the next round, going from almost 800 points down to 100 points, 19. So we have a mixed bag as far as points. Now, some teams, if it's a building round and you're spending a lot of money on assets, it makes sense that points are held back a little bit as you're building for the future. Because remember, this is a long-term goal, not a short-term. That's why I don't measure you by year, but by cumulative points over the entire project. Okay, so stock price, we have a pretty close tie between Automark and ASPAR Motors, both with around $32. Stock price, even some of the, we had a really big pickup here on the stock price for this company. And even, so it looks like everybody improved their stock price year over year. Sales, we have a new leader in sales. JS Automotive is $354 million in sales. So it looks like most teams increased. Only a few teams had a very small increase year over year. And that, with markets growing as fast as they are, they need to pay a little bit more attention to their forecasting. Okay, earnings per share. So we have one team here, two teams here. These two teams really rebound strongly on their earnings per share, which is a reflection of their increase in points. We had one team, the Super Autos, go down a tremendous amount in earnings per share. So we have a mixed bag as far as earnings per share performance. So let's switch over to the, let's look at the current round points. So AdMech, 951 points the first round. So what's great about the simulation, if you have a weak round where you didn't do so well, the next round, they make it easy for you to recapture the points lost in the previous round. So even if you did badly in round two, it makes it a little bit easier to year over year gain those points back in round three. So so we have a few teams here. If you scored under 300 points, that is a little troublesome. So you really, under 300 points is an underperformance. Anything over 300 points is doing pretty well. We have one team here, strategic investment at 60% gross profit margin, which is extremely amazing for the second round. And anybody over, I would say over 45% over in gross profit margins is doing okay. If you're below 45%, or specifically if you're below 40%, being below 40% really shows that you didn't read my emails or watch my videos, because I'm constantly saying you need to be over 40% to start out. And every round you should be moving up at least 5 percentage points in gross profit margin. So this shows unpreparedness in watching the videos or reading the material that I provide to help you do better in the simulation, because I'm trying to help everybody improve. Now, this score here on the side, the percentile rank, is ranking you against all of the student teams who participated worldwide in the simulation in the past 2 years. So we have quite a few teams over the 90 percentile, and we have a few teams below 40%. And by and large, most of the teams playing the simulation are undergraduate teams, so I usually expect my graduate teams to do better than the at least 50% mark. So if you're above the 50% mark, which most teams are, that's what I usually expect as far as performance. Okay, stock price. Stock price is really the amount of profits you have in relationship to the amount of outstanding shares. So if you're borrowing or issuing a lot of equity to fund your business, that's going to suppress your earnings, your stock price, and your earnings per share. Okay, your return on equity, how your invested capital is performing, and your total points. So this is the cumulative total points. This is what I'm scoring you on. So I'm not scoring you on individual round points. It's your cumulative points. So this is round 1 and 2 added together. And I'm only asking you to get to 2,500 points. And already after 2 rounds, there's a number of teams over 1,000 points. If they keep this up, they'll easily hit 3,000 points for the simulation. I'm only asking for 2,500 for the full grade. Now, so anybody over, I would say over 800 points, so most teams are over 800 points, you're still on track. So you just need to kind of consistently have an average of like 425 points to get the full grade in the simulation. And the full grade is not a very high bar, the 2,500 points. It's sort of like an average performance. Okay, so operating profit margins is going to look at how efficient your operating costs are, specifically your marketing costs. Some people who may be over marketing and not getting a big return for it. Our earnings per share, of course, is your outstanding shares and your earnings. So if you have issued a lot of outstanding shares, that suppresses your earnings per share. Return on assets is the profits the assets you purchase generates. So the more efficient your assets are, the better that return on assets will be. Of course, net profit margin is about interest. So if you borrow a lot of money, that can suppress your net profit margin. Okay, and your revenues per share is self-explanatory. Total asset turnover is your assets turning into revenue. So if you're buying productive assets that are going to help generate more revenue, like you buy a new production facility and you can manufacture 1,000 new cars and sell those 1,000 new cars, you're going to start having an improving total asset turnover. Okay, and again, all these are basic financial management ratios that are taught if you have an undergraduate business degree, they're taught in Business 110, they're taught in accounting, they're taught in finance. And if you're in the MBA program, again, the finance class teaches you the financial ratios, the accounting class, the investment class. There's many classes where this is a repetitive topic, these financial measuring a company operations or management, even in, of course, the strategic management class. All have included these basic metrics for measuring the success of a business. All right, so let me run you through what I would have done in round 2 if I was setting up round 2. So first thing, this is what, if I was a student in the class, this is what I would have done last round. So pay attention to this if you want to see how you can improve your performance, because I'm going to give some hints and tips on how to set up a successful long game in the simulation. So the first thing I do is I look at my overview points. So I made 1,000 points in round 1, which is very high. So I have it's going to be difficult for me to really surpass that, almost impossible to get another 1,000 points. So I'm hoping to get around 425 points. So I'm seeing here that my debt ratio, I made some points in my debt ratio, and my profit margins went up. I'm at a 53% level. My gross and net, operational, return on asset turnover. So every area I did pretty well. My forecasting was right on par. So just kind of review, and then I go into my assessment tab. So here is where if I didn't do so well in the area, and I did well in most areas, but my cash management, it's going to say, give me some advice on what to do and how to improve my cash management. So for any area you're working on that you don't have, say, at least 4 stars, you may want to look at the hint on how to improve your performance. And this will basically tell you, when students email me, how did I do? I say, go to your assessment tab, review your assessment tab, because that shows you in stars, in the score, in a percentile rank, and in the performance, descriptive performance. So above average here, excellent here. So this is where you go to figure out how well you did. Then I would look at my charts, and specifically my performance charts I would look at, and I would want to see, of course, review how I did year over year, but I also very specifically want to see my market potential versus actual sales. And I see here that my market potential was greater than my actual sales in all of my vehicles except for luxury. So here I sold 17. I said to sell 1,700 trucks. I could have sold 1,800. So this is missed potential. I missed 135 trucks here. Here I forecasted 2,100. I could have sold 2,300. So those 217 trucks I didn't sell went to a competitor. So I know that I should be a little bit more generous with my forecasting. Then I would go to the industry. And in charts, you could also look at your sales and marketing, see how you compare against your other teammates. But in industry, I'd look at, this is of course a recap of how I did, but I would look at my competitors. Okay, if this was the number one player, how did they make their vehicle? What were their selection choices for the vehicle components? What was their total costs? What was their gross profit, their market potential? How does that compare to me? So this way I would investigate the industry. Just like if Chrysler was having a hard time, they'd look at and see what Ford, GM, Honda, and Toyota, BMW were doing and analyze what did they do, where are they investing, how are their results, to make a comparison, to improve. And of course, you could, if you are focusing on finance or accounting, you could look over the financial statements, get some information from them, including the cash flow. You can go in, then you start the simulation again in round two. So now I see here in round two, my previous decisions, where I left off in my gross profit margin, and I noticed that the customer expectation ranges have increased, the importance factors have stayed the same, and the top end of the sales price for the car has increased. So now I'm going to try to rebuild my car, and I'm going to try to make a better car than I did the previous round, because consumers are demanding more. So I need to deliver more. Okay. Now I have this $900 cost reduction. Last round I had zero, but now I have a bigger cost reduction because I invested my operational investments last round. So I'm going to put a price in. Maybe make this under the market top. So my profit margin went from 44 to 48%, and now I have to do my sales forecast. So remember, the biggest hint I can give the students in the sales forecast is that you go to the student manual, and they have a section that gives you a baseline for year two. So I'm going to use this baseline, and I'm going to say, maybe I'll forecast a little bit more aggressively since I missed some sales last round. All right. And I'm going to do the same thing for oh wow, some of these expectations went up a great deal. All right. See, I always do the round before because I find that if I do the current round, then people copy exactly what I do, and that's not what I want. So I'm going to do 3,500. So that's why I always do. I'm doing year two while you're working on year three. Otherwise, people copy my exact entries. All right. So here I'm not improving my profit margin. So I'm going to have to try and see if I can cut back a little bit. I don't want to cut back there. Oh, luxury features are right here. So okay, so I got it a little bit improved, but not tremendously. So I'm not super happy with that. So I got about 2% increase, which is hard. Wanted that to be much higher, but I only had a $900 cost reduction here. Now here on truck, I have a $1,200 cost reduction. So that is good. So So as I build my truck, I'm going to be increasing customer expectations. Okay. Okay, so for truck, I could sell 25.90, 21.60. So maybe I'm going to under forecast my truck because I'm going to have to reduce some of my features to get my profit margin up. And I'm willing to sacrifice some features and some demand for my car as long as I can maintain a higher profit margin, because that's what investors are expecting, and I don't want to disappoint on that level. So let's see how I could do. Okay, so on the luxury, okay, I got up a little bit here on luxury. I think this is about the best. Oh yeah, that's 30 is the most I could do there. Okay. So again, this round I'm not really able to improve as much as I would have liked. Let's see what the luxury 22. Let's see, drop this a little lower. Okay, so I got about a 4 percentage point increase there. All right, so my profit margins are up, not as much as I'd like, which just means I need to invest more heavily in my operational investments. I'm going to take a minute to fill out the investment. The advertising takes a little bit longer, but my strategy for the advertising is to go back to see the industry, how I fared against the other competitors last round in the advertising charts, and try to gauge if I should be closer to the top end or the bottom end of the expectation range for advertising per vehicle. And of course, the vehicles that the factor is higher, I'm going to advertise a little bit more heavily, and to make up for how important it is to the investors, this buying criteria, this importance factor. And I'm also going to invest a little bit heavier in advertising for vehicles that I have reduced features in to try to make up for the fact that it's not really meeting or exceeding all the customer expectations. I can make up the difference with more advertising. Just like on cars like the Kia Soul, that underperforms in most customer expectation ranges for the car's basic build and performance, but they advertise so effectively, they make up for their decreased functionality as a car based on their excellent advertising. So advertising is an easy way to fool people into buying your product that may not be the best choice. And each of us do that every day. Okay, so now in production, I'm just going to jump over to finance real quick and see I have a decent surplus. So I can go into production, and I am going to have to buy a new production plant here. And you see how my production is 100% of my capacity. That is very efficient. And I'm going to buy more operational investments to help. So here on the sedan, I can make 4,000 vehicles, but I'm only building 3,500, which is not as efficient of capacity utilization because I have 500 cars I could have made that I'm not making. And again, I'm going to double my operational investments here. So truck, looks like I don't have to buy a production facility for truck. But I will, and it looks like I don't have to buy one for the luxury because I had enough capacity last round that was unused that I'm using this round. And I'll buy some additional operational investments. And these operational investments will give me that cost reduction in round 3. and will help me to be more profitable. Okay, so I still have a decent surplus. So what I'm going to do is, to get some extra points, I'm going to retire some debt early and retire some long-term, short-term debt, which will help my points in those areas. And I'm going to buy back some stock. Okay. Let's see, maybe I could do 10. Okay. So now I still have a big enough surplus, and I'm trying to keep. It's always nice to keep a surplus in case you don't sell every vehicle you promised to sell, you're forecasting to sell, and that's how you have an unexpected deficit. So if you say you're going to sell 5,000 vehicles, all those numbers go into your pro forma financial statements, as learned in Finance 502. So if you don't sell all the cars you promised, not all of your sales dollars will materialize, and not all of your net profits. That's why your last year actuals are different from your pro forma if you didn't sell every car you forecasted to sell. And that's why you need somewhat of a surplus to make up for the fact there may be some profits unrealized when you don't sell vehicles. And you can tell in the next round if you have a inventory left over on the production page. Those are cars you produced but didn't sell. Okay, so I'm going to complete round 2 and see how I did. Okay, so now I'm in round 3, Y3, and I see here that I made 587 points for round 2. So that's great. So I had 1,000 points and 500 points. So together, it's almost 1,600 points I have. And I was able to increase my profit margins on my gross, operational, and net. All profit margin increased. I did better in my quick and debt ratios because I paid down short and long-term debt. And since I bought back some stock, I was able to increase all my per share variables and my market capitalization. My forecasting was not as perfect. I lost some points in forecasting, but I did increase my operational. Every time you double your operational investments, you get 100 points. So that's an easy 100 points. And I had a surplus. Now, if I see 95% in economy, that means when I go to production, I'll see that I had a inventory 159 cars I didn't sell. So in my sales now for this year is $4 million less than projected, and my surplus is $3 million less than projected because I didn't sell all those cars. But you'll notice over here, now my operational cost reductions are doubled. Here's $2,400 reduction in truck. So that's going to help me out in my next round in year 3. So all part of the master plan, to set myself up to do well towards the end of the game. So I keep investing in my company. I keep my efficiencies tight on when and how I buy assets. So I hope you found this video helpful. For those of you who didn't do as well in round 2, now you know with this follow-up video. And the ideas in round 2 also kind of bleed over to round 3. So if you follow this setup and you implement some of what I've done in round 2 into your round 3, if you underperformed, this should help you to improve your score and do better. But you have to watch the video. And I had a number of students email me questions that obviously were answered in the video, and I just wrote back, please watch the video. So I do try my best to help you do well in the simulation, because I want everybody to get 100% in the simulation and understand the basics of how to run a company, because I don't think you should graduate from an MBA program without understanding the basics of sales, marketing, production, and finance on how to make decisions to run a company in a way that's going to maximize shareholders' wealth. And that's the whole point of this simulation, is to solidify. The strategic management course is a capstone course, and it's supposed to really tie together everything you learned in your principal courses and then help you graduate in a position where you know how a company makes profits and what a company needs, decisions a company needs to do to maintain their increasing profits, keep their investors happy, and increase their stock price, and most of all, maximize shareholders' wealth. Okay, that's it for this video. Good luck on year 3 of the simulation due next Saturday, and I look forward to seeing the results. Take care.